Hi everyone, welcome to Garmandani Access classes. This is chapter 1 Audit and Other Assurance Engagements, part 3. Objectives of an assurance engagement. Why we do the audit or what assurance we give to the financial statements or to clients. As per ISC 3000 revised, assuring engagements other than audits or review of historical financial information, there are two types of engagement. First is reasonable assurance and second is limited assurance. Reasonable assurance, it is that assurance in which the assurance practitioners reduces engagement risk to an acceptably low level in the circumstances of an engagement as the basis for the assurance practitioner's conclusion. What happened while the person is doing the audit, after completing the audit, if he satisfied that he check everything and everything is according to his benchmarks or according to the standard, he satisfied with the financial statement, so he give his reasonable assurance that I have checked everything. And what happened, there are two types of responsibilities for fraud and error. First, primary is management responsibility and secondly is auditor responsibility. Management is wholly responsible for preventing the fraud and error. And what auditors do, they check these statements. They might found fraud or error, they might not found fraud and error. This is not the primary responsibility of the auditor, but they give the reasonable assurance that we have checked everything according to our understanding, according to our experience, according to our everything we check, and we giving the reasonable assurance that everything according to our knowledge is correct. Reasonable assurance is always a positive form of assurance. Limited assurance, when we are not able to gain the sufficient appropriate audit evidence, then it's a low level assurance where engagement risk higher than in a reasonable assurance engagement. Nature, timing or extent of evidence getting procedures is deliberately less. You get the evidence less. Suppose you are doing the physical inventory or physical count of inventory, but you are not able to do it because management is not available for the physical count, so you're not able to gain the evidence in the inventory. You're not able to gain, you're not you didn't know whether the inventory prevails in the warehouse or not. So you need to check you're ready, but management is not supporting you. So you give the limited assurance, which is a low level assurance where engagement risk higher than in a reasonable assurance engagement. Definitely it will be higher because you're gaining the reasonable assurance, you're getting the limited assurance, you have limited evidence to conduct the audit, then you will give this audit. In maximum cases, mostly audits are done for reasonable assurance. Many audits are completed with reasonable assurance, but if you find some client or any company who is not supporting you during the audit, so you have to give this limited assurance. This is a negative form of assurance. Now at the end there will be auditor's report. The auditor report is a written letter from the auditor containing the opinion of whether the company financial statement comply with IFRS. The independent and external audit reports typically published by the company annual report. There is an annual report which includes the financial statements, balance sheet, P&L. So what happened? It is an independent audit reports. So auditor give the report to the management that we have done the audit. This is our opinion. This is our findings. So this is what we have done. We check whether the company accounts are prepared according to IFRS or not. So this is what we have done. This is our report. If you are aligned for some project, you done the project, you're giving some report. This is just like that. You are giving the auditor's report to the management. This is a truth and fairness presentation. I will show you one auditor report of Tata Motors, so you will get the idea how the audit is, how independent audit report look like. Uh, This is Tata Motors 74th annual report, 18-19 financial year. This is how independent reports start. To the members of Tata Motors Limited, report on the audit of the standalone financial statements. Opinion. We have audited the company's standalone financials of Tata Motors, which comprise a standard balance sheet asset. You will give the financial year from which you have audited. So this is your opinion. In our opinion, and to the best of information, according to the explanation given to us, based on the consideration of report of other auditor or separate financial statement, give a true and fair view in conformity with the accounting principles generally accepted in India or the state of opinion. So it's they are giving that opinion that this is correct according to understanding. So it's they have prepared the true and fair view. So basis of opinion, key audit motive. These all headings will be covered in the separate chapters like report, basis for opinion. You will not know here. I'm just showing just how audit report look like. I'm just showing you the demo. Discussion of key audit matters. How the matter was addressed to the audit. These are all they are discussing which they find during the audit. All these other information, management responsibility, auditors responsibilities, other matter. They reflect the revenue and cash flow, whatever they want to discuss in the auditor report they will discuss. Report on other legal and regulatory requirements. So they discuss each and everything of the company and they issue the independent report. I hope you will get the idea how independent audit report look like. You can also search on the internet of the various companies what the auditor find or what not. Thanks for watching. Please subscribe to my channel if you didn't subscribe yet, and if you like the video then raise a thumbs up. I will see you in the next video. Thanks.